Good morning, everybody. What is up, YouTube? What is happening, CTM? If you're new to the channel, welcome. If you are not, welcome back. So this morning we're going to be talking about the FOMC, as we will be seeing a meeting tomorrow, and we will get some very, very important numbers coming out of that meeting. So let me just make sure everything is good on my end over here. All right, so let me kill this music just for one moment, as this is important. I did put a link to the description of this, or in the description of this video for this video. If you haven't seen it, you should check it out.
Right now, and you are a trader, right? Not necessarily even a long-term investor, but a trader. Let's just say you're thinking about where to put your money. I'd actually love to hear about it in the context of being a trader, but also actually as a long-term investor. What are you supposed to do in this environment?
Well, I'm going to watch the Fed on Wednesday. If they treat these numbers, which were material events, they're very material. If they treat them with nonchalance, then I think it's just a green light to bet heavily on every inflation trade. The idea that inflation is transitory, to me, is that one just doesn't work the way I see the world. So I'll look.
All right there. That's Paul Tudor Jones. If you guys don't know who he is one of the most successful traders of all time, ever. And he's saying right there that if basically the Fed doesn't do anything, it'll be a green light to basically keep doing the way you've been doing it. As far as S&P 500, the NASDAQ, everything will more than likely just keep going up. He says in one part of that video that he can actually see like 20% possibly. Everything going up another 20%. Now, the inflation trade itself would be Bitcoin. It would be gold. It would be assets that you would want to purchase to basically keep from the dollar devaluating as if inflation comes. The Fed's saying that it's transitory. Can inflation even be transitory? I don't know if it can be or not, like he says. You know what I mean? It's like, how do you know how long inflation will last? You have no clue. We're in uncharted territory with the way the Fed has been doing everything lately, with the government printing so much money. So basically what we're going to discuss today on this video is things that you can look for on both sides of the trade. So let's get started. First and foremost, Aussie Yen. So I've been watching this thing for a couple days, right? Because it is an ascending wedge, kind of like Bitcoin was in a descending wedge. These things tend to break out in the opposite direction. So if you have an ascending wedge on this asset, it may have a possibility of breaking down. If the Fed says that they're going to taper, then you will see the markets come off, in my opinion. All right, that's not a guaranteed fact, but if the Fed decides to taper, this is going to be a trade you want to be in, as the markets will have what they call a temper tantrum. All right, or a taper tantrum. Sorry, taper tantrum. So basically, you would be going short on this asset. Now, last night I was looking for it to go short. All right. Someone just asked in the comments or in the chat, hey Heath, today are you able to explain order blocks, supply zones, Heath levels a bit more, please? I hear you mention a lot on your vids. I just wanted more clarification on it. Cheers. So basically you have an hourly chart right here. All right. Order blocks, supply zones, demand zones, they all are the same thing. Essentially what it is it's the last spot of an area of price right before you have a reversal, or if you're in a trend while price is moving down, when it catches a bid, or all right, for instance, if you get a green close, right, in a down move like this one right here, you get two green closes. Those would be considered your order blocks or your demand zones or your supply zones. Supply is usually above, so supply is usually referenced as resistance. Demand is usually below price. So if price trades into an AKA, or if it trades into a demand zone, it's simply just support. People put flashy names on these patterns because they're like I said, they usually have a motivation, a monetized in sentiment. And I can't even speak, it's too early. Basically, they're trying to sell something, so they make up their own names for the same chart patterns to make themselves sound more technical and smart. That way they can basically get people on the hook. However, it's always the same thing. These are the same things that people have been looking at for hundreds of years, all right? And it's nothing more than that. So you have price moving higher in this section of price, okay? Basically, what this means is since you got one more last up closing candle before you got an engulfing candle to the downside, or an outside range candle, or a bearish engulfing, you can see price just kept going down. So the reason this would work if price comes back into it, they don't always work. That's another thing. In trading, everything works, just not all the time. All right, so keep that in mind. This just means that they were selling into this green candle. The candle closed up, but instead of people buying it, they were selling it. And you have that proof because of the very next candle. Not only was it a down candle, it was an engulfing or an outside range candle, meaning you traded up even a little bit higher, took out the high, and then had a massive drop to the downside. And it works exactly the same on the bullish side. So in a downtrend, instead of people selling the last down closing candle, they are buying it. So what precedes is a big bullish candle that takes out the low and high of the previous bearish candle. Those places, when that happens in the chart, will tend to have a little bit of a reaction. It doesn't necessarily mean that trend is going to continue when it trades into the Heath level or the order block or the supply zone. It just means that that's a pretty good area to watch and see how price reacts to the level. All right, so that's it. They're basically, how can I say this? So I guess you would say like the theme behind it would be supposedly there's leftover orders up here that didn't get filled. So price tends to come back up into those unfilled orders to tap them or to clear them up and then head back in the opposite direction. But like I said, it doesn't always work. It depends on how violent is the trend moving in one direction or the other, how fast is it moving in one direction or the other, and where are the levels that you are looking at, right? So that's all of that stuff has to be put into context before these levels will even stand a better chance of working. So I know that I'm looking for bearish entries on an asset that was extremely bullish. If you go back to the daily time frame, you can see this asset was extremely bullish. Let's go get some moving averages on here so you can see how much momentum has waned. This thing has just been trading back and forth in a range for a very long time, making an ascending wedge, meaning the short sellers are backing off when they get down here, but the buyers are backing off when they get up here. So instead of buyers putting their pedal to the metal, so to speak, and pushing this thing above resistance, they're both stopping for whatever reason. Whatever's going on in the market, they do not want to chance it going higher. You can see when this trend was happening, obviously the buyers, they were buying. They were not stopping at resistance levels. So this would have been a resistance level right here. You can see that, yeah, you traded under it for a few days, but then you broke out. So they were very aggressive. When assets chop around back and forth like this, there is uncertainty in the market. Nobody knows what's going to happen because basically nobody knows what's going to happen. So these patterns, the reason they tend to break down is generally an ascending wedge is generally because the buyers are not able to basically push it above resistance. So it indicates that the sellers are just loading up in each peak. They're just loading up until you get that exhaustion. When that exhaustion happens, generally you get a big push to the downside. All right, so you're not trying to short into that because right now, even still, you can see the Aussie Yen is trading above the 21 EMA on the daily, which is generally bullish. it generally indicates that an asset is bullish. What you want to do is you want to wait for this thing to break down out of here, and then on a smaller time frame chart, look to see if it finds resistance when it comes back up into the area. So now that we've gotten that cleared up, let's get into this the trades. So if there is going to be a taper tantrum, the Aussie Yen, in my opinion, is one of the best assets to trade, as this thing will fly if it starts to go down, right? If markets become very worrisome, whatever, they will short this asset. Generally, last year during the liquidity crisis, Aussie Yen was one of the best trades ever. All right, so in the past it has been. Doesn't necessarily mean it will be now, but the yen and the Swiss franc are two assets that are commonly known as risk-off assets, meaning money will flow into the Swiss franc and the Japanese yen in order to basically hold off until they see signs in economic conditions that make them want to become risk on, meaning taking their money back out of those assets, putting them back into risk on assets. All right. Now, as far as inflation, Bitcoin has never been used as inflation before. However, I think it has been used as inflation this year because of the big, massive run up. Now, there was a halving on Bitcoin also, so usually that's when Bitcoin will start its bull market phase. But if you just look at the charts of gold and Bitcoin together, you can almost see where they stopped buying gold. Gold was on a massive tear, right? It went up to new all-time highs last year and was just absolutely crushing it. Then you had a massive pullback, almost a full year. This thing's been pulling back. Meanwhile, Bitcoin's been going higher. Just recently, at the top of Bitcoin, before you had the crash, gold started climbing. So it looks to me as if firms are absolutely rotating capital in and out of Bitcoin and gold, basically because they're not, I guess you could say they're not quite sure as to which asset they want to put their money in to hedge against inflation. So we will see how that plays out. Like I said, we have a lot of new market conditions. The markets have never been so overevaluated as they are right now. Everything is just flying sky high, right? And it has everything to do with the Fed. What they choose to do on this FOMC meeting will be, this is probably going to be one of the most important FOMC meetings that we have ever had, at least in the last 10 years. It is very important. When big players like Paul Tudor Jones starts coming out and telling people, hey, I mean, he flat out told you what he's doing in that video. Make sure you go check it out. I did put the link below. So wait for this Aussie Yen to break down. Wait for a clear signal of selling pressure. Massive push to the downside. Then you can go in here and find your Heath levels or your demand zones and or your old support levels, and look for those areas to hold as resistance. And that is when you enter the trade, looking for short side setups on this asset. I was trying to get in ahead of the FOMC, which is a very aggressive move because this thing can spike massively in both directions at the time of the print, at the time of the news. So it's probably best to stay away from it. However, I wasn't going to hold it during the news. I was just looking for a continuation to the downside on this from Friday. So I had a limit order setting right above the high of this green candle last night. You can clearly see that I did not get a fill. All right. We had a push down during the Asian session. I basically was like, I don't like that because usually the Asian session has a fake out move. So if it's heading down in the Asian session, maybe we're going to go higher tomorrow. We traded all the way back up before the London Open, found a top, and since we have pulled back. So I am absolutely looking for this thing to chop around inside of this big range right here. This is Friday's daily range. So as long as you're trading beneath this wick high and above this wick low, you are essentially range bound, not doing anything. All right. So wait until after the Fed. Wait until Thursday to look for entries on these assets, as Wednesday, after the news hits, you're going to have a lot of volatility. Market's going to go down, then probably come all the way back up, and you're going to be like, oh, okay, now it's going to be bullish. And then the next day, boom, straight down. It's going to do everything it can to generate as much liquidity as possible for the real move that's going to take place the weeks to come after that meeting. All right. So Aussie Yen is my favorite asset to look for downside. If the S&P 500 comes off, stuff like that, then this thing will come off as well. Now let's go look at this asset. This thing, it's basically, it's Caterpillar. All right. Look at this fall. What do you think's going on here? This asset is generally always bullish. As long as the S&P 500 and everything is going up, this asset usually does the same thing. As it's basically, it's like an infrastructure play, right? They own all the heavy machinery that it takes to build up any nation. So people like to keep their money in it. All right. Lately, the last few days, you've seen a massive sell-off in price. It's not massive compared to what cryptocurrencies are doing, obviously, but when you see moves like this, I generally keep an eye on it. We have came off 12%. 12%. So that's fantastic. If things are going to keep going as usual, like what's going on right now in the markets, this will be a fantastic asset to look for purchasing. And since it has came off a pretty good piece, you know what I'm saying? It came off basically to get situated for investors to pick it back up. Excuse me. So it's in a good spot. You did take out this wick low right there. So the target has been achieved for the bears. This level is a daily support. All right. You can see yesterday you traded down below the support level. You took out this candle wick low. That means you have cleared out any sell orders that were laying below 216.04. Any sell orders that were down there were ticked. So that means they could have been bought into already. Basically, this thing could chop around down here for a couple days. If the Fed doesn't do anything, if the Fed says that business as usual in America, then you could probably look for this thing to start heading higher. And since it came off 12%, that's a pretty nice spot to look for entries. If the Fed says that they're going to taper, this thing and many other things are going to come off very hard, probably very quickly. So it's going to be fun to see what happens. But I just wanted to bring it up so that way you can see how these big investors, how these firms and stuff, how they handle business. If they know they want to put money in this thing, so it's best to get it down lower so that way if the Fed keeps it up. Is there news on this thing that has called it to sold off? I didn't find anything of note. There were a few little things, but nothing that would have caused this move. Simply what this is investors are taking their profits out of this asset. That's it. No short selling going on, not quite yet, just profit taking. And you can see how big of a move that you had from that profit taking. So if the thing keeps going back to normal, business as usual, that money will probably get right back in this asset for, who knows, maybe a 20% gain on the rest of the year. Now, Bitcoin, where's Bitcoin at? So we were looking for this breakout. I made sure I got a video out before the breakout because we were looking for the breakout, right? And I wanted to be one of the first to say breakout incoming because that's what we got. The reason I was looking for the breakout is because you are not making lower lows. Every time you do penetrate down into the $33,000 area, it gets picked back up. This bounce was a smaller bounce at support, right? But then you traded deeper into support. And so far you came up, you were just basing right underneath that trend line. That is good, right? That's what you want to see. You pulled into the midpoint of this bullish candle and boom, ya, shakalaka. That's what we were looking for. Exactly what we were looking for. And I also said you're not going to buy the breakout. You're going to wait for this thing to find support. This is the third day, right? This was Sunday, yesterday. Now we're on the third day. This thing can come off a little bit more. Look for support. You could find support possibly right where it's at. You know what I'm saying? Just look at it on a smaller time frame chart. If you don't want to watch it on a daily, mark your daily levels though, as those are important. Now, will an hourly trade underneath of a daily level? Absolutely it will, because it wants you to think that it's going lower. These are the two areas to watch, the two areas that jump off the chart at me. 39,293, that's the upper echelon of it. I don't like that one. I would much rather be trying to pick it up at 37,403, and that's only if it finds support down there. I am looking for Bitcoin to trade up into the $45,000, $50,000 area over a period of weeks. All right, I'm not looking for this to happen today, tomorrow, and Friday. I'm looking for this to take place over a large period of time. So you'll probably see little moves to the upside, consolidations, a little down, it'll get picked back up until you get into areas where investors much lower will want to get out of the asset. That's when you will see increased selling. I am not saying that will be the top of the market. Obviously, we have to wait to see what happens when it does get up there. But the plan has been this all along. I've been saying the same exact thing. If nothing else, this channel is extremely consistent since this push lower. We do not sell in panic selling. If you sold on this push lower, you did it wrong. Unless, now, let me rephrase that. If you were in the red as this was going lower, obviously selling is the best thing to do. If this is all unrealized P&L for you, like it is for me, like it is for other professionals, then you do not sell in this, because you will get a bounce at some point. It can take weeks to months to happen, but eventually you will get a bounce. You have to. There's a lot of price up here that was not retested on the way down. Anything up here is good. Everything up here, except for maybe a little bit around the $60,000 to $62,000 area, has been tested. It's good enough. So when you pushed up here, you took out this large candles range and you tested it all up, and the market decided to go down. So there are large sections, or it's at least one section in this chart that you did not get a retest, and that's where I am assuming the market is going to trade to. What happens when it gets there, we will have to wait and see. Obviously, I'm bullish on Bitcoin. I want it to break through and keep right on trucking to the upside, making new all-time highs and going into those crazy prices that everybody was expecting back in the early spring and late winter of this year, right? So just give it time. You do not have to rush, guys. You do not have to sweat getting in this position. You will have time. You will have time. That's the thing about the markets. People think that it's going to happen very, very quickly. And generally, once they get experience under their belt, they start to realize that, wait, you know what? This thing takes time. It does. It takes a lot of time. Because investors, big money, banks, institutions, hedge funds, they're all positioning themselves. And it takes time to do that. They can't just market in or market out of a position like you or I can. They must build positions, and it takes time for that to happen. Look how long it took for whoever was building this position from February the 21st all the way to April the 14th. And yes, they were building a position. They were exiting longs. And you had other firms starting shorts, right? And then you get a move like that. Boom. Retest. Boom. It takes time to build a position. It takes a lot of time. So you don't have to rush this thing, and especially ahead of tomorrow. You do not want to be in this just yet. Tomorrow, during the news, you could get a spike all the way down to 37,403. As long as you start to see signs of recovery, meaning you start to trade away from the level with a pretty good bit of haste, then you can look to get in and make sure you manage your risk. Do not buy it with no more than 1% of your total account's equity. This is not financial advice. All right. Next, we're going to take a look at the pound dollar. Pound dollar is rolling over. I did take a short on this Friday. If you did not see any videos since then, I will go over it briefly. On this push higher, I got in the short position and I was aiming at this wick right there. That was my bullish target, or bearish target. So when price traded down into it, it exited 2/3 of my position size. I have moved my stop to break even. Yesterday, you can see or Sunday night, you can see we got a little bit of continuation to the downside and then sideways to up. This was another opportunity to get short. It did not trade into a level for us to get short. This is why I did not call out another short position on the pound, as there's nothing here to indicate that it should have been pulling around. Now, if you go into a smaller time frame chart, I know for a fact you will find a bullish 5-minute candle that this thing turned around at. The problem with that is if it's not combined with a larger term time frame target or area of price, though you will try to buy and sell every intraday 5-minute candle, and you're going to find out real quick that doesn't work, and then you're going to be like, his strategy's stupid, doesn't work, all I do is lose money. No, those levels, when I go find those 5-minute candles, I have probably 30 to 60 videos on my channel of trade recaps where I'm going over actual real live money account trades that I take and what I was looking for, why I did it. And you will see that in most cases, those trades always come at or around a massive level, like a daily or an 8-hour, right? So there's nothing here, right? You had a little bit of resistance down here on your 8-hour, but it's not really anything to get a good signal. Obviously, we do want to wait on this run of stops. That does happen frequently before you do enter the trade. But like I said, since there's nothing really close by, it didn't allow us to get in the trade. And you can clearly see that was 8-hour resistance. You got a strong hourly close. That would be looking like a breakout once it happens, right? There's stop sitting right above this bullish candle's wick. You can see that that's exactly what this move was doing, and that's all it was doing. It was running up and it was liquidating impatient traders. All right? If you always get in an entry and then you get stopped out and then price goes in your direction and you keep doing that, you're doing it wrong. You already know that if it goes in your direction most of the time, your direction is good. Now it's time for you to learn trade management and placement. All right? That's it. You are halfway there. Wait on that. Once you get that, look at this candle here. This is an indication saying, hey, we ran stops. Those were buy orders. If they were shorting it, we got up into that buy order, sold into the buy orders, and you got an engulfing, aka outside range candle. Now, do you short the bottom of that candle? No, because you're likely to get a pullback. Once you get that pullback, that is when you are looking to get short. And I've said this 160 million times that this is the candle you are looking to short, right? Stop above this wick high. And then look, you're setting at, say you got in at the close of that hourly candle, you're setting at least a 3-to-1, almost a 4-to-1 right now in the span of 2 hours. Boom, boom. That's the way to trade, all right? But you're here, so congratulations. I will do my best to get you trading like a pro, all right? I will sharpen your edge for you, and then you can back test it and twist it and tweak it and turn it into the most beautiful, profitable strategy the world has ever seen. But first, you must learn how to exercise patience. All right, in the Aussie Swiss, you can see that on the Aussie Swiss, it's doing almost exactly the same thing as the Aussie Yen. But see here on Friday, you did not have nearly as big of a down move on this asset. And if you go look at this thing on an 8-hour, you can see here's a daily. It's not doing anything like the Aussie Yen. The Aussie Yen is trading in an ascending wedge. This thing has already started a downtrend. All right, you have already started a downtrend. Once you took out this swing low, your downtrend has commenced. There it is. That would have been support as the market traded into it. You can clearly see when it traded into it, it tested it, stayed above it, tested it on the next day, closed above it, and also closed green on the day. Next day, went down, stopped anybody out that got long here and here, impatience, boom, to the upside. And then finally, the real move, the move I would have been looking for, run up, take anybody out that got short too quick, boom, there it is. And then you've been trading sideways ever since. So the reason it's been trading sideways for the last 2 weeks to 3 weeks is because of the Fed meeting. We've been talking about this thing since last month, all right, that this was coming up. This is the event. This is why the markets are stagnant. This is why they ain't moving. So we are going to see a nice run, I'm pretty sure, one way or the other. If you want to buy Bitcoin for an inflation hedge, that's fine. Let's go look at gold, as that is the other big inflation hedge. XAU USD, as well as silver. Gold looking good, pulling back to our level we've been talking about, telling people on this channel for, I don't know, ever since over in here, to wait on a test of 1837. I have not touched this chart since then. You can see that we are pushing lower. You do not take the buy yet. You have not gotten down there. So let's remove the drawings. Let me put it back up there so you can see 1837 spot 485. Now tomorrow you could get a push, a wick low all the way down to this level. If the Fed isn't going to change anything at all, that is your inflation hedge. All right, that means gold is probably going to come all the way down, test the 1837 spot, 485 level, and possibly find support there. That is the place to look to enter longs. There is your momentum, or damn it, your moving averages, which show momentum. You can see that you are closing below the daily so far. So now everybody is on the wrong side of the trade if they are thinking that this is a short. In my opinion, you are not looking to short this asset until you take out this swing low. Then you look for a pullback in the price. That's when you look to get short, right? You're coming up on your 50 EMA. Let's go look at the weekly and see how those averages are situated. Beautifully, absolutely beautifully. If you're bullish on gold, this is what you want to see. You have turned around, and this is weekly. So these things only populate after the weekly candle closes. 603. So basically, there you go. It looks good. It's fantastic. Let's go back to the daily. Where's our RSI? Boom. What are we testing? Yeah, the 50 spot on the RSI. See how this starts to come together? This is looking better and better and better as a long opportunity. So, but we will wait. We want a test of this level. Hold your ground. Become a patient person. When you get a push down into this level, you can even wait for the daily to close. That would impress the guts out of me. If you were able to let it trade into the level, then wait on the daily to close. If the daily closes above the level, you can then look for bullish opportunities on the next day. Any push down into to test that last daily candle's push, that would be the entry. Wick underneath there, or stop underneath the wick. Or you could wait on day 3 even. Just depends on how price action. If it's going to be an inflation hedge, I would say that you're probably going to have, it's probably going to move pretty quickly. So we will see. I will keep my eyes on it. I go live Tuesdays and Thursdays, so the Fed will speak tomorrow. Thursday morning, I will go live, and we will go over the numbers and what that could possibly mean and what I'm looking for at that point in time. There is silver right there. It's doing the same thing, trading sideways. It's basically not moving at all. However, you did get the same bullish push off these lows as you got on gold. The thing is it's just ranging up, so it makes it difficult to look for bullish entries. So this is your new support. This was support until this candle took support out. Now this is support. Next area of support directly under you is 27.022. This level is 27.425, right? This level is probably going to break. I want to see a lower test. And then that Heath level down there, supply zone right there at 26.50. 26.50. So a push down to there, in my opinion, would be the better entry for a long on this asset, as you will get underneath all these wicks. So a spike down into there, boom, back up. Possibly. Nothing is ever for good. It's only always probable and possible. And that's pretty much it. Those are the main assets I'm going to be watching. Pound, dollar, euro dollar, Aussie yen, and gold, Bitcoin, stuff like that. So good morning, everybody. On stack, I have ETH88. Oh, the chat just glitched out on me. Morning. Early birds, yep. We get up early around here. I like to be up well before the New York opens, so that way I can look at all my markets, read all my news, get everything that I need to get done, then look for entries. Could you please take a look at Swiss yen? Yeah, let's go look at Swiss yen. CHF-JPY. This trade will probably move as well, but I think you're better off looking for like Aussie yen or something, and then maybe Aussie Swiss, or Aussie yen and New Zealand Swiss, or something like that, instead of actually trying to trade this asset, because both of these currencies are risk-off assets. So if both of them start to get a heavy bid, you're going to see choppy sideways action on this. Now, if the Swiss is stronger than the yen, obviously it will move up. If the yen is stronger than the Swiss, it will move down. But what I'm trying to say is more than likely it will be more choppy than not. You're seeing a trend in it now. So you are seeing Swiss franc strength already, right? And you have seen yen weakness. But why is the Swiss franc strengthening up? That's very odd. Very odd. It's been in an uptrend for a long time even. Long time. Here is, no, it's not March. Oh, I'm way far away. So here's March 2020. Remember the liquidation event? How big the S&P 500 went down, how big the Aussie yen went down, how big the New Zealand yen went down, New Zealand Swiss went down. Look what the Swiss franc and Japanese yen did. It traded sideways for the whole period of that liquidation event. So let's go over here back to the Aussie yen. Look at this. Oh my goodness, in comparison, I did not move anything. That is how much bigger of a move you had on that asset. So yes, I mean, it has been trending up. I don't know exactly what you want me to say on it. This is one of those assets that I will trade intraday, but it's not like something that, you know, I'm looking at all the time. Because of that reason right there, you're like trading two assets together that generally either they do the same thing or they, you know what I'm saying? Either people are selling the yen in the Swiss or they're buying the yen in the Swiss. The fact that they're selling the yen and buying the Swiss is quite odd to me. However, I wouldn't be looking for bullish entries if that's what you're asking. You are completely overstretched. You have been trading straight up. You are at an area where you could possibly see exhaustion risk. All right. Since the Swiss franc has been going straight up, they would probably start moving money in the yen. If the Fed is going to taper, you might see this thing come off a bit as the yen will start to strengthen. As of right now, the yen is weak. So this is possibly just a run on these stops right here. There's a good chance that in the next day or two, you're going to see a big red candle on this asset. Now, I'm not saying go short it either, because you don't short strong assets. There is no sign of momentum waning. Well, I take that back. There's your bearish divergence right there. Price made a higher high, lower low. Price is making higher highs and higher lows. That's your bearish divergence. Has not played out yet either. So maybe today or tomorrow is the day to look for a short on this asset. Just make sure you manage your risk. Manage your risk by putting in a stop. Make sure you're not risking more than 1%. Remember, with Brexit, there was a lot of counterintuitive chop on the Brexit EU news. Absolutely, run DMC 555. You are correct, my friend. I do remember that. Bitcoin will drop if the Fed tapers. Yes, it will. More than likely, if the Fed tapers, Bitcoin will come off with the other risk on assets. I'm not saying that for a guaranteed fact either. It's just what I would be looking for in that case. Right? Because Bitcoin is still a risk on asset. It's kind of also a risk off asset, as it's an inflation hedge. But if the Fed starts to taper, you're going to see a lot of capital rotate out of risk on assets into risk off assets for a bit. You will see a pullback, and it will probably happen until the Fed says, okay, we were joking. Ha ha ha, wasn't that funny? No, we're kidding. We're going back to stimulating the market because the market is a crackhead and we've been feeding it crack for so long. It must be remain fed. So, yeah. If that analogy makes any sense, it probably doesn't, as it's very early and I still haven't drank my Red Bull yet. Loving it. Who can't love it? Man, we're about to see some opportunities, guys. Hey, bud, if Fed signal raise rates, would you change your 45 to 50? I mean, yeah, maybe. There's still a lot of, like, these markets are, they're very efficient. So when there's inefficiencies in the market tends to correct them. Not always, but a lot of times. So Bitcoin does have some inefficiencies up above it. And that's the only reason I'm looking for it to go back up there. I understand that Bitcoin has had some extremely bullish news, and I am a Bitcoin bull, all right? It sounds weird to hear a Bitcoin bull say stuff like, hey, be patient, be cautious, as you may be coming lower. No Bitcoin bull wants to hear that. But it's my job to show you the light, so to speak. Jordan is extremely bullish on Bitcoin, and people mistake that as cockiness or arrogance when all it is confidence. Can he be wrong? Yes. Can me being on the other side of the tape saying, hey guys, yes, it could go higher, but it can also go lower. So protect your risk to the downside. These are the areas that I'm looking for this type of stuff to start happening. It's just to basically get you to question yourself, right? He's telling you it's probably bullish. I'm telling you maybe not. So do your own due diligence. Make sure you protect yourselves, guys. We can teach you how to trade, how to invest, but we can't do it for you, right? And if you're doing stupid stuff like trying to get rich today or tomorrow, you're never going to be successful. The long, slow road wins the race. Let me go back up as the chat glitched out again. Hey, thanks for breaking it down. You are welcome, Oni. Good morning, everybody. Jay Bradley, my boy, what's happening? All right, there's that. On STG moves. Oh, gotcha. That was a continuation of your original comment. Bitcoin will drop at the Fed taper. There we go. Heath, can you please look at GMIA, sort of Amazon of Africa? Yeah. I've never heard of it. I have never traded it, but I will see if I can find some levels for you. It's traded on the New York Stock Exchange. Just give me a moment. My computer's glitching up again. If I just kill one monitor, it will probably stop, which is uncanny. Very upset. Let me see here. You had a big pullback on this asset, a big one, which it's okay because a lot of tech has been seeing that pullback. So that's probably, if you say this is the Amazon of Africa, that's why you're seeing this pullback. Most tech is getting beaten up. You did find support down here. Never mind that big green candle, okay? That is, oh wait, never mind, I'm sorry. You had another bearish close right there. So your support is 23.10. The reason you never mind this is because this was a big gap down, but that gap down got faded. So price traded right back up into the previous day's candle. This would have been the time to get short, but you would have only been looking for that daily low to be taken out. So you have found support. You are testing resistance. You did get closes above that area, but you did not get closes above the actual resistance, right? That bullish close right there, that's your last and highest bullish close. That is what found resistance. You were pulling back. You pulled into a nice order block or demand zone right there. Also, those will act as support if it's the lowest close in the section of price, and it is. Now you have another support and another order block down here. So you can see that it is trading in a narrowly tight range. So the three areas that I would be watching for near-term price, let's get rid of that, would be 29.19, 27.86, and 27.07. All right. Can this have already found support? Yeah, because you did take out this daily high yesterday. This could have been a pullback. This could have been the opportunity to get long. I'm not saying get long. I'm saying this could have been your pullback, and to look for that. So let today play out and see what happens. You did take out the high. I like to see closes above the high, as that is more indicative of bullish strength than something like this. But this, on a smaller time frame, is nothing more than a pullback. You are setting real close to support. So I would like it down here a little lower possibly, but you didn't take out this high by closing above it. So this could just be continuation to the downside also, right? Because this is the first swing high you have to get above in order to call a possible trend change. As you will have a low, high, higher low, higher high. This is that higher high you've got to get above. And you did get a higher high, just barely. You squeaked out a higher high. So is this going to be higher low support? Yeah, it's possible. Cat has sight problem, and that high inflation will affect their input costs, and taper will also affect them. Absolutely it will. That's why you've seen the move before the FOMC, because they know it will be affected. But also, like I said, if things are going to remain the same, it's probably going to go higher. Hey, but Fed signals raise the rate. Would you? Oh, sorry, I read that already. There we go. All right. Ed D says, smash the like, people. Heath is on fire. If you wouldn't mind, I would appreciate that. Thank you very much. Bank Nifty 35 600K. Cali, hey, will it go up tomorrow? Will it go tomorrow? I don't understand what you're asking. I don't know what Bank Nifty is. I don't trade it. Oh man, I don't know the signal. You said 50? No. 35 600. Let's go with the front month contract. What'd you say? 35.6. Pre-market, you're trading at 35.296, or post-market at the close. It looks similar to that Africa's Amazon, but this thing, as far as the pullback where it's at right now, but this thing is bullish. Here is a straight up trend, right? This was a test of support. Tested this area here. So that's where you got a bounce. Came in, higher low support, another bounce. So the trend is going up, right? The trend has changed. Near term, you are looking for higher low support areas. When you have something that's this choppy and gappy, it makes it very difficult to find valid levels. We do know that support is 34,929, spot 35. You did get a push below that support. You did take out this candle's low, this candle low, and this candle's low. Or did you? You did not take out that last candle low. However, you came real close to doing it. So that was probably good enough for the market. You have bullish continuation. This is a trending candle. There's only three kinds of candles for you new traders: outside range candles, inside range candles, and trending candles. When you take out the high and low of a candle, that is an outside range. When you trade on the inside of the high and low of a previous candle, that's an inside candle. And when you only take out one side, the high or the low, that is a trending candle. This is a trending candle. You have possibly found a low. Look for a retest of 35,082 or 34,929. This candle's open or close, or this candle's close. Those are the three areas I would look for bullish entries on this asset. You do have resistance or what would be resistance right above you at 35,540. So you're definitely not wanting to buy it here or where it is right now. You definitely want to pull back, as that makes your risk to reward better. As you know, you are bullish. You know that is resistance. So don't buy into resistance. Buy lower and target resistance. Hopefully that helps. What do you think about $75,000 Bitcoin, says Will McPhail. I think Bitcoin will see those prices. Do I think Bitcoin will see those prices this year? I don't know, man. You know what I mean? I do not know. Is this the top of Bitcoin? I don't know. Did Bitcoin just find support? Are we going higher to find 75? I don't know. But what I do think I know is I think Bitcoin will be way higher than $75,000 in 10 to 15 years down the road. I think Bitcoin is going to be much, much higher than that. I don't know what it's going to do now. That was a big sell-off. You lost 50% of your assets value. Now, I know Bitcoin's different than all the other assets. However, when you lose 50% of your entire value, that is not nothing to be shrugged off like it ain't nothing. It's pretty massive, right? 50%. That's a lot. That's half. Half. It got cut in half. That's never a good thing, ever, in my experience. But Bitcoin's different. So yeah, I mean, it could. Let me go back to Bitcoin and basically show you where, and then I have to start wrapping it up pretty soon, as today's an important day, and I do have limit orders situated, and I am looking for entries. So let's do it like this. So if you use the all-time high, right? I have been just using this level as I thought it would be safer, but let's just use it because it was the high. And you pull your fib levels all the way down to the low, right? You can see these areas on the chart. Now, don't mind this price action here. I don't care if it lines up. What I'm looking for is price action that hasn't happened yet, all right? This was a massive push to the downside. You are trading at the lows. You still have not taken out your capitulation candle. You have still not taken that candle out, whether to the downside or to the upside. That means you are literally sideways. Yes, you took out this high. Yes, you did get, oh no, you haven't yet. Got a daily closure above that resistance right there, right? So it's hard for someone like me to get extremely bullish when I see price action like this. Until you take out this candle right here, this one. Until you take out that candle's high or low, you're sideways. So we don't know even if Bitcoin's going to go higher from here or not. Like, you could literally turn around at 42,000 and go down and test the low end of this range. You are range bound. It's choppy. You must take out this daily candle's high with another daily candle's close. Then you can say you have taken out the range and you are heading higher with a trending candle. Then that would be much, much better. This, we were looking for a small breakout, and I am going to be looking for bullish entries, but I will probably, if this thing heads lower, I will be stopped out, right? But I do think you're going to go higher. This price up in here needs to be tested. And like I said, each time you get to a major fib level, the 382, the 50, or the 618, people are going to be exiting Bitcoin's position, their positions in Bitcoin. There will be people that do it because they do think this is the top, right? So at that point, you're going to see increased selling. That's when we need to get above there. Like I said, anything lower than this swing high all the way up here is just another lower high. Just another lower high, and that sucks because that's such a massive range to change back into bullish. Right now, the near-term trend is down. In order for you to revert back to this bullish trend, you got to get a close back above $59,000. Because you could come all the way up to there and then roll over and crash, and all you did was made another lower high. I'm not saying that's what's going to happen. I'm just putting some perspective behind it. So when I hear people calling $75,000 Bitcoin, this is June, so you got half a year to do it. Can it be done in a half a year? Absolutely. It only took a month for it to crash, right? So it could go back up, but you're going to have a lot of selling and pressure on the way up, is all I'm saying. And that will hinder price a little bit. Loving this, Heath. Thank you, Brett Arthur. Good morning, Heath. Thanks for the wisdom. You are welcome, my friend. XU100 BIST. I don't know. XU100. I don't know what oh, there it is. Yeah, I looked at this the other day. You did get that break above. And it looks like you did just barely close above, but you closed red on the day. Then you went up, stopped everybody out, boom, and you're heading lower. So this was just a stop run, but since you did take out that high, you can still look for support. I can't remember. Oh, it's a doji. So there's your first level that may find support. Nope, this one right there. Then there's the next level where you might find support at 432.93. This last bullish candle's closed, as that was resistance until this candle broke out. So if you get back down there, you might find support there. You did take out this big range candle here to the upside, which is good. So until you take out this candle's low, well, you did take out the low to the downside. Yeah, this is one of those scenarios where I just don't know. So watch, it's already trading below that support. So see if you catch support at 1432.93. If you lose that on a daily closing basis, next area to look for resistance or possible support would be this bearish candle's close. The open first, but then the close. So just use the close and be safe. 1420.49. If you lose these areas, you're going lower. ETHUSD. Let's go look at ETHUSD. BTC pairings. Yeah, ETHUSD went up, and then you got that big move to the downside, and you're consolidating. You're making what looks like a bear pennant. There is going to be resistance right there at 0.066696. Support is right under you, as well as now right there at 63058. So this is a dead cat bounce. The dead cat bounce has been sold into. These lows have been taken out, and you have taken out this high. So, but still, it's nothing spectacular, right? That's not a bounce that you want to see. It's wedging up on the lows. So possible breakdown, look for 61273. If this area doesn't hold support, that's your last support at 60483, and then you're gone. Next area is 51532. And if the bull market's going to continue, that's the area at which I want to buy ETH BTC. Around as close to that 0.05 level as possible. That's where I want to buy it. Prom USD FTX. Prometheus. It's disgusting, man. It's doing nothing but going straight down, making lower lows and lower highs the whole way down. Yes, you got a big, fantastic, nice bounce. That bounce was sold into. It's getting crushed, absolutely clobbered. You're even tightening up in this range still. Yes, support is right under you. You got this level there that's already basically got a close below, so that's no good anymore. Next area of support you'll be watching will be 9.680. And it's a pretty good chance that this thing breaks down if it starts testing that support again. If you got to get above this high up here. I should have closed that. Damn. I'm just gonna wrap it up here in a second. Anyways, it's 6:30. Yeah, you got to get above this high, man. Wait for that. Wait for this high. Once you get a daily closure above that high, then you can look for higher low support possibly. Until then, there's just nothing to do on it. And then I'll go look at oil, and unfortunately, guys, I have to wrap it up. I will be back on Thursday morning at the same time. Where is oil? Right here. There it is. Yeah, oil is just going straight up. Straight up. It's losing momentum. Well, no, it's not. You're back above overbought. So, yeah, it's going straight up. I don't care about this high and where it is now as far as being divergence, as that's way too far away. That divergence was already played into with this push lower. So when you're looking for divergences, it's been, in my experience, it's best to just look back like a month, or not even, you know what I mean? Like just a couple weeks, a few weeks back, as those are the areas that's going to matter. And there is no divergence, right? And get it to pull back up. See, there was your high, and then you're trading above it. So there's no divergence here. It's strong, man. It's heading up. Would I buy it up here? No. Hell no. No way. Not even close. Because exhaustion risk to the downside. It can't just keep going up. It has been, but it's going to pull back eventually, right? There's a big level at 73.50. That's what I'm watching right now. It is a weekly order block, a weekly Heath level, weekly supply zone. That's the only thing I got in it. So, yeah. Would you stop glitching? Yeah, I mean, it's going up, but there's no way I'd be looking to buy oil up there. No way. If you get a pullback down to 67.94, then maybe. But that's not a guarantee either. And that's just an old target, so never mind. I don't like that level. 66.26. A pullback into that and a daily closing above. As long as it holds support there for a few days, then I might look to enter oil. But it would have to do that. There's no way anybody should be buying oil today. Or yesterday, for that matter. Depending on where you bought yesterday, you're either green or red, right? That's not what you want to see. You want to see your asset going in the direction of your trade. You're just losing momentum up there is what the problem is. Unfortunately, guys, I have to start to wrap this thing up. Excuse me. Did not mean to do that right in the mic. First, I have to say thank you. Oh, wait. I got it on the wrong screen. Hold on. I always have to thank my Patreons and channel members, but my computer's glitching up so bad I can't control the mouse, which is fantastic. Next stream will be better as I will come into it without so many monitors. This computer is supposed to be able to handle this anyways. Thank you so much to all the channel members and Patreons, guys. It really means a lot to me. You guys rock. Going in for the rest of the day and into tomorrow, guys, is going to be a sit on your hands kind of a day. And for at least until tomorrow, right? Till after that Fed announcement. Once that happens, then we will discuss what we're going to be looking for, as we'll have the data we need to make logical, sound investing and trading decisions. Going into a trade right now, I would be absolutely looking to exit that position before tomorrow, right? So, I mean, it is possible to find a day trade today. I'm not saying that. I'm just saying if you're looking for swing trades and stuff like that, you need to wait, as there's not any way we can know what's going to happen. So just sit on your hands, be patient. Once we get the data, we'll have the info we need, and we can start making better decisions. With that being said, thank you guys for being here. Thank you so much. Make sure you trade safe, trade smart. Happy trading, everybody.